You're watching News9. I'm Shweta Kothari. We're bringing you stories from the world of business, policy and economy. To my left is my colleague Suyash Maheshwari. Suyash, markets opening at flat this morning.
Yes, Shweta. So Indian markets witnessed another day of selling pressure, and there was a flattish opening this morning amid a negative handover from the US equities, which, by the way, it's on its worst weekly decline since March of 2023, and a sluggish open in Asian equities, where we are seeing a 1 to 2% correction across the board in Asian stocks. Now, Nifty opened below the 19,750 mark, and Sensex was down about 20 points in the opening trade. However, currently the markets have fallen below. Nifty is currently trading below the 19,700 mark, which was being looked at a crucial support level for the index, whereas Sensex is also trading down about 50-60 points. Now, shifting focus to the broader market, Shweta, the broader markets were trading with moderate gains at open. However, the sentiment has turned bearish, and both mid cap and small cap indices are trading with losses of about 0.3% at this point in time. Okay. Now, among sectors, it's a sea of red. Most sectors are trading in red with moderate losses. Financials, which was seeing some sort of buying interest in the opening trade, has also turned negative, whereas PSU banks remain the outlier, and they are up about 1.5%. Auto stocks was also up in the morning trade. They were up about 0.4%. Currently, they are up about 0.11%. And IT pack and realty pack and metal pack, they are the ones which are trading with significant losses currently in this morning trade.
All right. So those, of course, are updates as far as stock markets this morning is concerned. So, interesting, mid cap, small cap, that is, in fact, that have out rallied all headliners for a very long time now, saw some correction yesterday.
They did see some correction yesterday, and Shweta, if we look at the mid cap and the small cap pack, last week we saw there was one day particularly where mid cap and the small cap indices corrected by 3 to 4%. And after that level of correction, a lot of analysts were of the opinion, that the tide has perhaps turned, and the sentiment could be bearish for the broader markets moving forward. But as we saw, the tides turned once again, and mid cap and small cap indices have been outperforming the markets, which, by the way, are scaled all-time high levels. Last week, currently we are seeing some sort of a pressure where the markets have fallen about 2% from its peak, and Nifty is trading about 19,700 levels.
All right, and let's also quickly take a look at some of the stocks we are tracking this morning before we go to our guest to understand how markets are likely to perform perhaps next week.
Yes, Shweta. So, among the stocks in focus, let's start with Glenmark Pharma and Glenmark Life Sciences. Now, Glenmark Pharma will sell about 75% stake in Glenmark Life Sciences for a consideration of about 5,651 crore. Now, at this level, each share will be sold at about 615 rupees in Glenmark Life Sciences, which is at a slight discount from yesterday's closing. Now, Glenmark Pharma, which currently owns about 82.84% stake in GSL, will continue holding about a 7.84% stake post the deal. Now, after the deal, Nirma Group, which is the buying buying company, Nirma Group will become a new promoter of the group, and Glenmark Pharma will be reclassified as public shareholders. Now, if you look at the stock, Shweta, Glenmark, we have seen a rally in pharma stocks across the board. Now, Glenmark Pharma is up about 95% year to date, whereas Glenmark Life Sciences has rallied about 50%. However, both the stocks are trading with moderate losses, as you can see on the screen. Glenmark Pharma was down about 4.59% in the morning trade today, whereas Glenmark Life Sciences fell about 1.48% this morning. Now, another stock that was in focus today, Shweta, was Vedanta. Now, Vedanta Group, the board of Vedanta Group has approved raising funds of about 2,500 crores via non-convertible debentures in one or more tranches. They'll conduct the fundraising, and the company says that the issuance of NCDs is a part of the routine refinances that is undertaken by the company in ordinary course of business. Now, very interestingly, as we know, Vedanta has been under the scanner because of the high debt on its books, and we are seeing yet another refinancing or financing taken through that route.
Okay. All right, and so those are some of the stocks in focus. We'll come to the rest of them, but Kush Bohra is joining us on the show. Kush, thanks very much for taking time out. I think you're on mute, but I want to begin by asking you, what are you making of markets? Are they in a consolidation phase? There's a marginal uptick this morning. A lot of experts that we've been speaking to for the past 1 week said that this is the much needed consolidation phase and it begins now. It's not happening.
Hi, first up, thank you for having me on the show. Well, this kind of a market where participants want the market to come down, they want the market to go into a consolidation mode, and thankfully the market's actually kind of obliging. I know this that the dip actually has been quite sharp, to some participants' comfort, but I think this was a much needed one. The way we are looking at it is that this is perhaps a springboard. If the Nifty has to go to 20,300, 20,500 kind of levels, say by Diwali, then we needed this kind of a dip, a pause for the market, especially in the mid cap and the small cap names, where it was a lot of overheating, a lot of overstretching. Then just makes it a little difficult for new participants to enter. There's a lot of money and there are a lot of participants waiting on the sidelines to enter. So once the dust settles, I think we're in for a rebound. But as the case is, we don't buy the dip, we buy the bounce. So we'll wait for the markets to perhaps bounce. A couple of points indicating that perhaps the market could settle somewhere close to these levels is the first, that there's a 20-day moving average support which might kick in. Also, we're starting to see some sort of put base being created around the 19,600, 19,700 kind of level. So if that does sort of hold up, then we might hold on to these levels. If not, then 19,500 is the next level that we're looking at.
All right, 19,500.
Yes, 19,500 will be the key support, as Kush is saying. Kush, now in light of the recent correction, now market was in a need of some phase of consolidation after Nifty having run up about 1,000 points in a matter of week. Now how do you see the market's position currently? Is it still a buy on dips market, or has the sentiment turned bearish?
Well, it looks actually, it depends on the kind of horizon that you're looking at. As I said, if you're looking at a few months horizon from here on, then this opportunity might turn out to be, a buy on dips kind of a setup. If you're looking at the near term, then there's no two ways about it that, we are in a bit of a, downtrend here. Although we may be closer to the support zones now, so a fresh shorting from these levels, may not look as attractive. So yeah, if you have anywhere from 3 to 6 month kind of a perspective, this dip might turn out to be a buying opportunity. That's how we're looking at it. Even on the bank Nifty, see, the signs were there. If you look at the 46,000 kind of levels, Bank Nifty attempted that somewhere in the mid of July and wasn't able to sustainably cross those levels. Similar was the case, just until about a week ago, where we tested that 46,000 level. We went above that, but we weren't able to sustain. So the lack of strength was very clearly evident, in Bank Nifty as well. So the fall is not surprising. The pace of it is perhaps a little surprising. But if you look at the overall trajectory, the result season will start, kicking in from, let's say, about a couple of weeks from now. So that could perhaps act as a fresh trigger. So we are looking at this as a buy on dips if your perspective is a few months down the line.
Kush, as you said that there has been some weakness in the market, at least at higher levels, and you also touched on Bank Nifty. Talking about Bank Nifty, just last week Bank Nifty was within a touching distance of its record high levels, but just in a matter of 3 days the index has corrected about 3.5%. Now what's the big overhang for the banking pack?
HDFC Bank. I mean, there we've got a very clear answer. In fact, if you look at the entire move, not just Bank Nifty from, let's say, about 43,500 to 46,000. If you look at Nifty also, when it started moving from that 19,500 to about 20,000 odd levels, Reliance didn't participate and HDFC Bank didn't participate, and these are the two big boys. So if your marquee names are not performing, if the biggest of the heavyweights are not performing, then there is a very clear overhang that is sort of likely to come in. Now PSU banks was the theme, and that is what pushed the Bank Nifty a little higher. But if you see, even SBI hasn't really contributed as much. So since these big names aren't really contributing in a big way, you will see this kind of pressure at higher levels. So if Bank Nifty has to indeed cross 46,000 and sustain above that, you would need the likes of SBI and HDFC Bank to perform. See, Kotak has, an overhang, of its own going. ICICI is, on a strong footing, but really hasn't, contributed as much. So some of these big names starting to kick in will actually do well for the bank Nifty. And we do see some kind of, support zones, being created at those levels. My only concern is HDFC Bank still doesn't seem to have bottomed out. If you look at the charts, the stock is, despite all kind of news and clarity around it, it's still actually slipping lower. So I would wait for HDFC Bank to settle, and then perhaps take a cue from there and go long on Bank Nifty.
Actually, my next question to you was about HDFC banks. As we know, it has been under selling pressure. In fact, I was reading a report which suggested that HDFC bank alone has wiped out about 1 lakh crore of investors' wealth in just a matter of couple of days. Now, as we know, there are some headwinds as far as post the merger with the parent company HDFC is concerned, and several brokerages, especially foreign brokerages, have also considerably cut down the target price on the stock. So how does one navigate the stock at current point in time, and at what levels HDFC Bank once again becomes an attractive bet?
And just to add to that, I remember speaking to another expert on the show, Gaurang, who was very upbeat on the HDFC stock, specifically mentioned strong fundamentals of the bank, and therefore the pricing will sustain, perhaps will come back to its pricing in a week or two from now. What's your long-term view on HDFC stock, as well as bank's capability to perhaps sustain a good price point for its stock?
Well, from a fundamental standpoint, I don't think there's an issue. However, the hangover and the clarity, at least a couple of quarters of how the merger plays out, is something that the street will actually wait and watch. But if I look at the price action, I'm going as far back as November, even October of last year, and the prices were fairly similar, or maybe just about there. So the stock's actually not done anything, despite all kind of clarifications and all kind of statements that we've been hearing. So see, this has not been a trader favorite counter anyway, right? I mean, HDFC Bank, Reliance, both these big names aren't really a trader counter. So you'd want to approach them from an investment standpoint. So if that is your time horizon, if you're looking at anywhere from 12 to 24 months kind of a time horizon, these dips will turn out to be a buying opportunity, even though you're seeing the stock perform in a range. This is now closer to the lower end of the range. So 1500 is a very strong support zone for the stock. So I would look at accumulating at this stock even at this level. Even if it slips to let's say about 1500 odd levels, I'll be fairly comfortable, because my horizon is anywhere from 12 to 24 months. Near term, the pressure is very clear. It might see a technical rebound because it's approaching oversold territories and also approaching its support zone of 1500 kind of levels. So from a trading perspective, yes, but I don't think too many traders have a position in HDFC Bank. It's more of an investor story, more of a positional buy. So even though the stock's not done well, I am not too worried in terms of the entire structural play. It's not done too much in the past year or so, but we know the reasons why. So give it a quarter or two. I think that's when the clarity should start emerging, and the translation into the price action should also start kicking in.
Now, Kush, among us, there has been a lot of negative cues in the markets, but there was one bit of positive news that came in this morning, that JP Morgan has decided to include Indian bonds in its emerging market index. Now, Indian bonds will make up a maximum of 10% of the index, and HSBC estimates that this inclusion will lead to a potential flows of about 30 billion. Now, of course, it is a big win for Indian bonds, but what sort of an impact do you see on other asset classes, particularly equities?
Well, to begin with, what we are seeing is an immediate reaction. The Bank Nifty was a rank outperformer for the last couple of days, right? But today, if you see, it's holding up in the green territory, even if, barely so. It's still holding up in the green territory, and the Nifty rather slipped into the red territory. So we're seeing a bit of an impact already with the financials sort of, trying to, hold some ground. What I have been hearing from, other discussions is that this is perhaps the first of many such inclusions, perhaps the biggest. But if we get included in more such indices, then the inflow number could be higher. Of course, it will be staggered, but that augurs well for the Indian bond space as well. You're seeing some traction in the likes of Bajaj Finance. You're seeing the traction in the likes of Chola Mandalam and Shriram Finance. Incidentally, from the non-banking space, these are some of our top picks. So definitely a positive on some of these names. My only concern is once this news sort of pans out or sort of plays out, the hangover sort of is wiped out, will these stocks sustain and move higher? It will still depend largely on what kind of inflows are coming to the equity markets directly, which have not been so great. Of late we've been seeing FIA selling pressure, so I'll wait and watch. But these are certainly some of the names that could at least get some sort of support from this news. And Bajaj Finance, Chola Mandalam, Chiram Finance, as I said, these are some of the names that I have on my radar. As in when the tide turns, these might perhaps be the first ones to rise and rise higher, harder and faster.
Now, Kush, Glenmark Pharma and Glenmark Life Sciences was in the news. Now, Glenmark Pharma will sell about a 75% stake in Glenmark Life Sciences to Nirma Group. Now, Nirma Group is not a traditional pharma player. So, how are you looking at this buyout?
Yeah, well, I don't really track this from a fundamental perspective, but then what we understand is Nirma sort of delisted itself just to perhaps dabble into these ventures where they wanted the kind of autonomy where they could perhaps share their expertise, get into this space where the shareholder concern is not a big deal. So while from that perspective, the view remains this. From a share from the price action perspective on Glenmark Life Sciences and Glenmark Pharma, but we're seeing a bit of a consolidation play out in the space. Aren't we? Glenmark's already sort of done its thing. Cipla, we hear at least if not the entire thing, some part of it is on the block. So this consolidation will keep the entire pharma space very interested. Plus, I think there's also the word of PLI scheme coming into the pharma scheme, pharma sector as well. So some of these news will keep stock specific action intact. Although just by the look of it, Glenmark Life Sciences and Glenmark Pharma both haven't really done too well, despite the news. So I would actually avoid these stocks if I'm looking to buy any of them.
Kush, Vedanta is also in the news now. Vedanta is also looking to take on additional debt of about 2,500 crore rupees. And this comes at a time when the company is already under the scanner for, massive amounts of debt on its books. So, is repayment for the company going to be a problem? And if so, what sort of an impact do you see on the stock?
Nothing too positive at all, and I think that's very clearly visible because the stock made its this year's highs right at the beginning. In the starting of the year itself, Jan was when the stock made its high, and it's already been in a severe downtrend ever since. So I don't see this as a very encouraging move from the company's perspective. And when we translate into the stock price action, again, not encouraging at all. I'm looking at this stock from daily, weekly, monthly, all sorts of time frames, and it's actually slipped below a lot of its key averages. So this is actually a shorting opportunity. The only minor concern being that the stock's approaching a very psychologically important level of 200. Now technically it does have some relevance in the sense that it had support zones about a year ago, somewhere around these levels. But psychologically also we understand that these numbers sort of tend to play out. If it holds to about 200 odd levels, then fine. If not, then we could perhaps see it slipping lower to 170 also. So very clear avoid, just that the shorting opportunities perhaps missed because the stock made its high in the beginning of the year around 330 odd levels and has been in a severe downturn from there. So a very clear avoid on this one.
Now, Wipro was another stock, Kush, that was in the news today. Now, Wipro's Chief Financial Officer, Jatin Dalal, has decided to step down, and Aparna Iyer, who is Wipro's Full Stride Global Business's CFO, will take over from September 22, which is today. Now, the stock has been under pressure in the last 5 days. It is down about 4%. It was also trading with moderate losses this morning. How is the stock looking on the price chart?
When it comes to the big four names of the Indian IT industry, which is TCS, Wipro, Infosys, HCL Tech, in the pecking order, Wipro has always been number 4 on our list at least. It's not really sort of performed even when the entire IT pack was doing phenomenally well. Been a very a mellow kind of a stock, been in a range for a while now, so it's never really been on our radar. I don't think the news, although it's just organizational, it's more operational, but it's not done any favors to the stock. So for us, if we really were to pick something from the IT space, it would be HCL Tech and TCS. And if I have to then skip the gun and move on a little lower to the mid cap names, then Persistent and Bsoft are the other two stocks. So it doesn't really fall on our radar, Wipro, and I think it's very evident from the stock price action why, right? Not done too much in terms of the recent moves as well. So I would avoid Wipro for now, and I just shared the top picks that we have from the large cap and the mid cap space in the IT industry.
All right, Kush, always a pleasure speaking with you. Thank you so much for taking time out and for joining us this morning.
Likewise, thank you so much.
And thank you to you too, Suyash, for all your inputs this morning.